So I'm gonna, just wait a couple minutes to get started, but just to kind of a background of why we're doing this today is because I kind of got a lot of feedback from folks on the last live that we did when I was talking with Gabe Ruffalo about the short sales and the mortgage moratorium and everything like that in Minnesota, and found that a lot of folks were kind of confused about how foreclosure works in Minnesota, how short sales work. Sorry, I'm just saying, Hannah, you can hear me on your phone, but not on your computer. Okay. I'm hoping you guys can hear me. Nate, can you hear me? If you guys can just say that, I just want to make sure. I'm doing this on my computer for a different way this time, and it was a different setup than what I'm used to. But anyway, so I wanted to, like I said, really kind of dig into a little bit about what it means for foreclosure in Minnesota. Because again, I think there's a lot of misconceptions, and I just want to set, some things down and let folks know, and so they can feel secure and understand how things work. So I'm going to start off, and I do have some notes with me just so I can kind of keep on track with you guys, but I'm going to have Hannah be watching on the side for questions as they come up. If it's really pertinent, like I said, I'll be able to see them because I have them on my list here. I'd love to have questions at the end, during it. If you need to interrupt, if there's something that didn't make sense, let me know and I can go back to it. But more or less how it works in Minnesota, right? If you're behind on your payments, typically it's going to be about 120 days or so is when your mortgage lender is going to file a foreclosure. There are two different types of foreclosure. There is a judicial foreclosure and a non-judicial foreclosure. Typically, and I'll explain what that means, but typically how the non-judicial works is it just goes through the county, and then the judicial has to go through the court system. So more or less, the court will confirm the amount, and then it gives the borrower a set time to repay the loan, or what they call curing the loan. And that's, again, like I said, it's done through the court system. It typically takes a little bit longer than it would be for a non-judicial foreclosure. What a non-judicial foreclosure is that goes through the county. You don't have to go through the courts to set that up. There's a clause in your loan that typically will say that they can sell the loan without having to notify the courts of it. And that typically ends up going a little bit faster for folks too. So that is authorized by the lender to sell the property. And then typically Minnesota, though, just so you folks know, it is a non-judicial state. So in both circumstances, though, the borrower has to be notified of the sale at least 30 days before it happens. Now, in Minnesota, we get public announcements that are put out. It's typically through any type of law review or newspaper, through any kind of, it has to be you have to be publicly notified so that that information is out there. And we actually do follow those reports just so that people can know a little bit longer. Typically, that's going to come out 6 weeks before your sale date, or 45 days or so. And so that's what ends up happening, is that sometimes we actually are the ones that notify folks of their sale even before they know, because they'll get a letter delivered to them through, hi, Jason, they'll get a letter delivered to them through the sheriff's office saying, here's the date of your foreclosure. And so it is actually posted also to just in writing at City Hall. You can go down there and see those too. So what ends up happening is that once you get that notification of your foreclosure sale date, they'll give you what your date is, and it's going to be anywhere from 30 to 45 days out from when they wrote you that letter. So your sheriff's sale date or auction date will typically be that 30 to 45 days out. Now, what that means for you is that from that time when you get that notice to when that sale date is, you have the opportunity to catch up on your mortgage. So it will be whatever months you owe and behind. There's going to be fees and penalties, and also now attorney's fees on top of that, because the attorney was issued to initiate the foreclosure sale date. So what ends up happening is that whatever that amount is, let's say, you have $6,000 in arrears or back pay Then you have the mortgage fees, penalties, interests, and the attorney's fees on top of that. And what ends up happening is that you actually have to pay that entire amount in one lump sum. It can't be made in payments. The bank will not take it. It has to be one entire lump sum. Sometimes they'll keep some of it to pay for some of the penalties and interests and things like that that accrue. But other than that, everything has to be paid in one lump sum. And also just to the attorney filing fee is typically like ballpark around $2,500 or so. So do know that. So I really try to stress that with folks, that if you really think that you're not going to be able to pay, what's owed in arrears before that sale date, we have to come up with some other kind of plan. Because what ends up then happening is that on that sheriff's sale auction date, your house is more or less put up for auction. All right. And then whoever it is that buys the loan, and 9 times out of 10, it's typically the mortgage lender that's going to, quote unquote, buy back your loan. But what ends up happening is that then they continue to own, your note or your loan. And so what ends up happening then in Minnesota is that we have what's called redemption periods. And typically for a non-judicial foreclosure, the redemption period is 6 months. So what this means is that you then have 6 months from whatever your sale date is to whenever your actual foreclosure date is, to pay back what you owe. Now, the big difference of this is that whatever you owed in arrears, so let's say it's $6,000 or $7,000 of whatever that back pay was for what you owed on your loan, you now are actually going to owe pretty much what you owe for your entire mortgage. So let's say you have a $150,000 loan balance. If you owed, let's say $7,000 in back pay, plus, attorney's fees, fees and interest, whatever it is on top of that, let's just say it's 10 to make this easy for the math. If you are not able to pay that $10,000 up until that actual sheriff's sale date, and then your house goes to auction, the bank is more or less going to buy back your house for $150,000. They literally write a check and hand it over to the sheriff there. They, in a sense, then own your house. I mean, you still can stay in your house, but they're owning that mortgage and that loan for those 6 months until what your actual foreclosure sale date is. Just to be clear, for folks here in Minnesota, you do not have to move out of your house after that sheriff's sale date. All that does is it puts in place a time for your redemption period. And what that redemption period is a time to see if you're able to come up with that money. Now, again, remember, it seems kind of counterintuitive, because if you weren't able to pay that, $10,000 before the sale date, what makes them think that you're going to be able to come up with $150,000 afterwards? However, it is a good thing set in place for folks, because then, if anything, it gives you some time to be able to save up your money and move to a place that, you'll have to move out of your house by that end sale date. Do keep in mind, though, that if for some reason you are able to come up with that $150,000, there is still a per diem penalty. So fees and interests and things like that are still accruing every day. So if, 4 months down the road, something happens where you're like, hey, I can come up with the money, you're going to have to ask your lender for an actual payoff of what that number would be as of whatever certain date, get that money together, and then pay in one lump sum. And then you more or less redeem your property, or you can stay in your property. I'm hoping all of that's making sense for you guys right now. The thing is that I really stress the importance of knowing what the timelines are when it comes to this stuff, and understanding what it means when it's your sheriff's sale date. There's so many people that we've talked to that think, oh my gosh, this is my sale date and I have to move out by this date. You don't have to move out by that time. But know that 6 months down the road from that sale date is going to be your official foreclosure date. And yes, you do need to be out by that time. So I just wanted to make that clear. A lot of the times, we have folks that are like, you know what, I've got this time, I'm going to be able to come up with the money. I just need a little bit more time. Now, there are a couple ways of going about postponing your sale. One is you can actually postpone it yourself. You can go down to the county recorder's office, you pay a $46 filing fee, What that ends up doing is it postpones your sale date for 5 months. The thing that doesn't happen, though, is that it doesn't change the timeline that you have. So that 6 months is still going to be in place. You're going to have to figure stuff out within that 6-month timeline. Now, what ends up happening is that your sale date, like I said, gets postponed, but it gets postponed for 5 months. Do remember, though, that whatever is owed in arrears, you're going to still have to pay that amount in full. And then you're also going to have to pay whatever, that per diem is on top of that. Now, the other thing is that once that sale date hits, and let's just say for some reason you're not able to pay, now your redemption period is moved down to 5 weeks. So what would have been 6 months perhaps before of being able to figure out, save money, find a place to move to, you now only have 5 weeks. And I'm seeing here Nate saying Florida and Georgia, it's a year if it's a primary residence. Yep. So not with us and non-judicial. Typically on judicial foreclosures, that could be the case. Sometimes those are a year redemption date. And so it does say that in your announcements that typically is put out. And again, don't quote me here, I've only seen the redemption periods last a year if it's a judicial foreclosure. I've never seen it, out longer than 6 months for a non-judicial foreclosure, but that is a good, a tip, like I said, because that's going to be something important for you to know what that date is. So, like I said before, just to kind of go over, if you postpone your own sale date, it still keeps that 6-month timeline in place, but it does postpone the sale. But again, like I said, that what you owe in arrears is still going to be adding up every day with the fees, penalties, interest, attorney's fees, and all of that. But it is going to, like I said, delay the sale. You'll be in your house, but you're still stuck to that 6-month timeline. So I'm trying to look. Sorry, I had a question that came through, and I actually can't read it. So I'm going to have to wait until the feed goes up a little bit more. Sorry about that. I'll try it. Nate, I say that you have that in there. But I want to talk a little bit about putting a short sale in place, because this is also a way that if for some reason you're not able to come up with those funds, a good way to stop your sale, and if anything, and postpone your sale. And this is what Gabe and I were talking about a couple days ago, is that he and I worked together to help homeowners here postpone that sale, which then gives you some time. So we, in a sense, put a hardship package together, and I'm going to talk about what that means in a little bit. But we put that together, and then we present that to the bank. And then, like I said, they're required then to postpone your sale if they get a full, hardship package, and take a look at what your options are. And so this, in a sense, helps some people. We've been able to help some people that were able to come up with the funding in that time. It takes that timeline out of there and the pressure of being able to, find the money in that short amount of time. It puts a pause in place. And then if for some reason, they're not able to come up with that money, and don't want to end up in foreclosure, their safety net is then created by doing this short sale. So to get into what a short sale is, a short sale means that you're selling your house for less than what is owed on your mortgage. So more or less, you're shorting the bank what they owe on, what you owe on your mortgage. So let's say you have a $150,000 loan, but you're able to get an offer on your home for $130,000. What ends up happening is that is considered a short sale, because you're not going to pay your mortgage in full. But what will end up happening is that your mortgage will be satisfied because of the actual short sale. Couple things that can happen from this is that I know a lot of people ask me about deficiency balances, and we'll talk about that too. But there's also recourse loans and non-recourse loans. What a non-recourse loan is that if the funds from the sale, and this isn't a short sale, over the mortgage property on the house are not enough to cover the loan that you have, the mortgage holder, is not going to have recourse against the borrower, meaning that they're not going to be able to come after you for a deficiency balance. And what the deficiency balance is like I said, like let's say you had that $150,000, somebody buys it for $130,000, you have that $20,000 remaining as a balance. What ends up happening is that if it is a recourse loan or a state that does allow for deficiency balances, they can then come after you for that $20,000 deficiency. Now, typically in Minnesota here, like I said, we have the non-judicial foreclosures. Those typically then, they are not allowed to go after the borrower. So we're generally considered to be a non-recourse state, although there are certain situations where mortgage holders or creditors may seek that deficiency balance. A lot of the times, if you have two loans, like an 80 loan, 20 loan, that can then, they can go after you for that if that second mortgage doesn't settle. Because typically it's going to be that first mortgage that gets paid off. Sometimes the second won't. Sometimes they'll also take, they'll take a smaller payment for that. But this is kind of where the beauty of the negotiations come in with Gabe, is because he a lot of the times will work with those two mortgage holders, talking to the both of them, trying to figure out a way to satisfy both of those liens. So like I said, though, just know that, and for us too, any of the, the short sales that we've dealt with, in the last few years that we've done, we have 100% success rate on getting rid of that deficiency balance. And so, like I said, there is a very, very good chance for folks here too, again, basically because we are a non-recourse state, that you won't have to worry about that deficiency balance. So, what I wanted to talk about too is, and then I really wanted to get some questions in here too, if you guys have them, is I'm going to be posting another sheet that really kind of goes through what the benefits are of doing a short sale versus a foreclosure. If for some reason you're not able to come up with those funds, we always hope that folks are able to come up with the funds. I mean, we do all the time. But again, if you're not able to, this short sale then puts a pause in place, like I said, for you, and then allows you to then give you a little bit more time. And then it also gives the bank a chance to be able to look and see if you qualify for any of, what they can do to help you. So I do want to go back a little bit, because I realized I forgot something, is that I wanted to talk about what it means to put a short sale in place. So a lot of the times what banks will do, and, I've talked to a lot of folks too that say, oh, my bank's helping me. And they definitely can. So part of this process too is putting the hardship package. And so there's a bunch of paperwork that you have to fill out for that, even if you are, trying to do a loan modification. Typically what that looks like is that you're going to have to present 2 years of tax returns to your mortgage company. Excuse me, guys, sorry. Your W-2s from the last 2 years, your last 2 months of pay stubs, and if you get paid weekly, typically they'll want to see more of that. 3 months of your bank statements, a hardship letter, and what's called an RMA, or a request for mortgage assistance. What this does, and then, also your monthly expense habits. And so what this does is they'll put all of this together and really take a look at your financial situation to see if there is something there that is, that they can take out some type of loan modification, do whatever it is that they can help you. And FHA actually has something that they call what's called a waterfall process. And that's typically kind of the same thing, but they're really taking you through the FHA to see if there's any type of, their waterfall process to see if there's any type of loan modification that they can do with you. And so what that looks like is, they'll, with FHA specifically, they'll, look to see if you can do a HAMP loan, which is a home affordable modification program. So more or less just a different way of saying a loan modification. There's a couple different HAMP loans that they can do with you, but they more or less take you through these steps to see if you qualify for any of these, to see if it makes sense for you. Now, a lot of the times this loan modification will work for people. A lot of the times it doesn't. It changes your payment. It can mess with the equity in your home. And you really have to determine if that's the best thing for you. A lot of the questions we ask too sometimes is, okay, and I have some folks that have used their tax returns, to pay what they owe. And then they're losing, they're losing what they have as their backup. And so it's really kind of a discussion between you and your family to see, hey, if we do this, is this going to make sense for us? Is it better for us to, do a short sale, or is it better for us to come up with that money? So just, know that there is a lot of information that has to go into these, banks. And I do want to make it very clear to you guys, if anybody comes up to you and says, hey, I'll stop your sale if you pay me X amount of money, that is a scam. That is actually illegal to do. Do not listen to them. Help for this type of stuff is free. Your mortgage company can help you. People like us can help you. I just want you to know that there is help out there, but do please be aware of those scams of people doing that. Okay, so I wanted to get back to some of these benefits versus some benefits versus some of the negatives of some of these situations. And so when it comes to a short sale versus a foreclosure, and I'm going to have this posted on our website too. And I apologize. I know the last couple of days our website has been down. We were having issues with our web host, but it is active and it's live there. All of that information that we went over on Tuesday is available. It's www.propertyhousepartners.com, and the house is spelled H-A-U-S. Again, www.propertyhousepartners.com. Like I said, I'm going to have a short sale versus foreclosure sheet on there for you guys to see the benefits of doing a short sale versus a foreclosure, and then also the most up-to-date information and resources all available to you about what's going on with the current mortgage freeze. So I'm going to talk about that too at the end of this, because there have been some changes that we've seen here. So I wanted to talk about what happens with your credit score. And I do want to say, I will just put this out there that my husband and I went through this back in 2012. We went through a foreclosure, but actually ours ended in short sale. And it was really a blessing for us to have that investor come in and purchase the home because it just fared better for us too in the end. At that time, I know there were a lot of folks going through that situation. And what I've seen is there's really been a big benefit for us. His credit was affected for a short amount of time. I think there were so many people that were stuck in that situation. And I just want to be clear about, you have to make the decision if it's right for you or not. But, your credit's typically, dinged about 50 to 100 points. And your credit history, like I said, can be dinged. I'm not going to go over everything with you here, but like I said, I'm going to have that stuff available for you. But it's just a lot easier to get a loan in a shorter amount of time than versus doing a foreclosure, because I know I wanted to see there are some, I think I have some questions coming in. Hannah's been sending me, I think, some text messages about it, but I do want to make sure. Oh, it says, does Minnesota have, sorry, this is one question before from Nate, and Hannah just sent it to me. Does Minnesota have docs, or is that lender specific? I'm not sure or is it DOS? I'm not sure what that means, but we do have lender specific request for mortgage assistance packets. There is a general one, but some of the lenders also have very different packets for their request for mortgage assistance. So depending on whatever lender we have, those are what we present to them. And then, typically after that, Gabe is then my contact with the bank, because we sign that. So, and I see Kevin here, you said it's a year for land over 40 acres. Yeah, I to be honest, I'm going to, I'll just be honest here. I haven't dealt with any land that's in foreclosure. So, and then Kevin's also saying Wisconsin, it's backwards. Yes, that's true. Redemption, then auction. Due on sale clause. Oh yes, Nate, there are due on sale clauses, depending on, what ends up happening if somebody were to do, and this is kind of getting into the investor side, if somebody were to do, if they were to take over their pay due, doing like a subject to, that's definitely something for another time. There are due on sale clauses here. Yes. But I did want to talk about just one more piece of it too, is what ends up, and again, there are some consequences of short sale as well. One of them being you obviously do have to leave your home. That is something you are not allowed to, to stay in your home. You are not able to financially benefit from a short sale either. So do know, unfortunately, that if you do have any equity in your home, you will be you will be losing that equity in the house. And also know too, I've had some folks that we've been helping that said, oh, am I just able to sell my house to my family member? No, unfortunately, this has to be an arm's length transaction, which means that it can't be anybody that you directly know or that is related to you. That is not considered an arm's length transaction. So do know that it has to be someone outside of that arm's length. And then the other part too is that the timeline can be a little bit weird and it's not really guaranteed. Whereas I know you have that 6 month, that's, if you stay in that 6 month time, at least you know what the time length is. But with short sales can take anywhere from, 3 or 4 months all the way up to 2 years. Our average that we've been helping folks for the last few years has been anywhere from about 6 to 9 months or so that it's taking. And so what I've always told folks is, be ready, because once we get that approval letter, then it's usually 30 days from that time. And so things are still moving forward. I actually just got an approval letter today, and we have to close, by the 26th of next month. So speaking of that, I did want to do one more piece on here for you guys about what I heard with the mortgage moratorium here. And this is going to be really important. And I posted a link to that on this last video that I did before this. And that was that while this is all really, great and that things are being paused, I want us to do this with care and consideration for what that means. And I know there was, the $2 trillion $2 trillion, package that's being pushed through right now in the House and Senate is going to provide some relief to banks. But the thing is, if you guys watch that movie, the video that's in the comments, what ends up happening is let's say you decide to partake in the 3-month forbearance. What I've been told in some of these big banks, and this was told directly to Gabe, and then Gabe shared this with me, is that you are then required, after that 3-month hold of what we're on right now, you are required to pay everything plus that 4 month in a lump sum. So knowing that, let's say your mortgage is $2,000 a month, you'll have to pay, those 3 months, so $6,000, and then your 4 month pay of $8,000. The only thing that's going to be waived is any kind of fees and interest over that time. Now, I don't know if this is being done across the board. I know that's being done with some private loans. I know servicers are really struggling right now because from what I understand, they're going to have to get some US, backed treasury bonds to cover some of this stuff, because they in essence have to pay, their lenders as well, because they're just the servicers. And so I know they're getting kind of trapped in the middle. So I just want folks to be really careful that if you decide that you want to partake in this mortgage forbearance, that it could be beneficial in some ways, but I just want folks to be sure that they know what the consequences of it may be, whether it's positive or negative. So I think the best thing that Gabe, really kind of pushed to is call your bank immediately, tell them exactly what's going on, make sure that they know what your situation is, and then ask them what the repayment plan is. Because if it is all in one lump sum, you need to know that. If they're able to do some type of loan modification with you afterwards, you'll then have to go back to that hardship package and present all of that information to them to then do the loan modification. I did hear someone today say to me, now again, this was just someone telling me this, that like, oh, I just heard they're going to put it on the back of the mortgage and just add to your time and make you sign a new loan. I don't know if that's true or not, but I just wanted to put this information out there, knowing, like I said, from one of the very big banks, Gabe has a contact at some of these banks. And again, obviously with him being a negotiator, he talks to these folks all the time. They said this is going to be something, that folks are going to be really surprised at when this, moratorium lifts, that, there may be, folks that are going to have to pay in full. So I just wanted to put that out there to make sure that you really sit down with your family and decide that if, this is the situation you're in, and a lot of people are in this situation, and unfortunately it's those folks that are kind of living on that paycheck to paycheck that are going to be, that are going to be stuck in this situation. And I know that there's, going to be those stimulus checks coming out. Now, granted, that also is I think it was, and again, don't quote me, but I believe it was a $95,000 or less that you would get some money that's coming to you. But I do want you all to take care, and please know that, we're here to help in whatever way we can. I'm more than happy to answer questions. You can send me a direct message if you want. You can send me, you can contact us through our website. Again, that's www.propertyhousepartners.com. Hannah, if you could put that in the comments for me, that would be really great. If you guys have questions, I've been kind of reading what you've got going on here, but I wanted to see if anybody has any questions before we sign off. We're right at the half an hour mark, and I didn't really want to go over that a ton, but If you guys do have questions, I'm going to post, the short sale versus foreclosure on our website also, so you can see what the benefits are if you end up having to be, sell your home in this time, whether it's now or later, because of, what's happening because of this health crisis. Know that we're here to answer any questions that you may have, any concerns. If I don't know the answer, I'll find somebody that does. We're really here to help folks learn about their options, give you information, give you content, keep you up to date on the latest things that have been happening. Like I said, the only thing that I knew that was new was, like I said, that, people are going to be having to pay in that lump sum afterwards. So I'm not seeing any new questions coming through here. I know Nate posted some stuff on here. He said, yeah, as investors, the sooner someone notifies us, the better. Yeah, absolutely. I mean, we're able to do, since we're having our stay at home go in effect tomorrow at 11:59 p.m. here in Minnesota. I actually have a couple appointments with some folks set up that are in pre-foreclosure right now that really want some help. And so we're still doing that help. We're able to do it virtually with you. Whatever way we can, we're going to set up whatever we can. Now is kind of the time to talk about that. So the other thing I wanted to mention too is that next week, I'm really going to start I'm going to keep this going because it seems to be really helpful. I'm actually going to do some stuff next week on, working with the elder community. So I'm super excited about this. I'm going to have Nicole Will on with me she's a founder of Will Gather. And what Will Gather is, it's an online resource that's dedicated to enhancing the well-being of our aging community by connecting activity directors and therapeutic recreation professionals with vendors, venues, and others in the senior living community. And they're also a resource right now for those families and loved ones, that have aging parents and are navigating that senior living industry. She and I have started to work together on this. Right now, she's really working on a lot of virtual stuff that's going to be available to folks. Obviously, we're not allowed to visit that vulnerable population. I'm sure there's a lot of people that are struggling, right now with not being able to see their families. And so it's going to be a really great interview. I'm super excited to talk to her about it. She'll be a really great resource for you guys. If you want to check out her website before I interview her on Tuesday, I'm going to do this again on Tuesday at 2 p.m. It's www.willgather.com, WILLGATHER.com. It's a wonderful site. And like I said, she's been working really hard to get some, virtual therapeutic and recreation stuff up for folks that are in those assisted living facilities to keep them engaged and keep them going since, we can't have as many visitors as possible. So any questions that you guys have, and then Thursday, I'm actually going to be interviewing some estate planners and elder law. I have 2 attorneys that I'm going to be, speaking with then and interviewing about certain things that we can do during this downtime to really kind of prepare, since there is so much time available for some folks. I shouldn't say for everybody, but really something to think about: estate planning, what it looks like for you in this time, and really kind of preparing for everything. And I just wanted to say, so we'll be doing that next Tuesday at 2 p.m. Central Standard Time. I'll be with Nicole Will from Will Gather. And then on Thursday, I'm going to be with 2 attorneys that I've been working with over the last couple years, specifically in probate situations. They're going to be talking about, I'm not sure if we'll get into probate, we might, but what that looks like, but really talking about estate planning and elder care and what that means for, those elders in your community. So thanks, you guys. I really appreciate this. Like I said, if you have any questions, please reach out to us on our website, www.propertyhousepartners.com. Until next time, I'll see you guys. And like I said, please reach out, send me a direct message if you have any questions. We're here to help provide as much value and content as we can during this time, I guess, of uncertainty. So be certain, though, that we will be here to help you. So I'll see you guys next time. Thanks so much.